Hey, good morning and good afternoon. Morning in America, good afternoon here in London. And we're back, Mohawk Forex True Scalping. The team is back. And obviously we're back because today is our favourite true scalping time, NFP. And we're about 25 minutes away from getting in on gold, as we always do. Every month we always do this stream and we always go in on gold. Seems to always move the most. There's other things you can trade, GU, euro, pound, NAS, US 30, oil. I've got them all on my chart here. We're on gold today. We've had a good start already this morning with our cable trade. We had a nice winner on pound dollar. We're set up for our next trade in the US session once NFP is played out and settled down. And I'm watching oil as well. We've got oil on our chart here. We've had some nice signals that were good winners, buys, 2 buys and 2 nice sells on oil already. We tuned into NAS as well, some good signals on that. That's been already, and US 30, but I say gold's our focus. We've got a line dropping where NFP is going to be coming. So as always, for anybody who wants to follow what we're doing, join our Discord group where I post setups and trades every day. Then you go to www.mohawkforex.com and all the information is on there and in the links below on the stream. So hit that like button and subscribe if you've not already subscribed, if you want to get notifications of when we go live. And we always try and trade the big news events, probably what most traders avoid, we take on. And we're in and out. This is the thing, we're not holding positions, we're doing multiple positions. And that's the system we do on IC markets. For those who want to know what broker I'm using, we're going to be trading with probably about a $3,000 account today, and we're going to be looking at probably like 0.5 on the lot sizes on gold, which is a margin of about $175. That gives me 50 cents a pip. So again, not Lambos, not big lot sizes. What we're doing is going to go in for as many positions as we can get filled. Obviously the broker won't fill every position that we set. We'll try and go in for 4 or 5 trades at a pump, two batches going in the direction hopefully of the NFP. What we usually find is that the news will come out, well, those in the know, before it actually gets released on any of the kind of news websites. We know that, the manipulation. So as we get the result, we'll get a second push, but the market will have already moved before. And most people, this is where most people screw up, because they see the move on their chart, enter in the position, then the news comes out and it's opposite to what the market's moved in, and obviously they get caught, they get flushed out and gone. So if you do miss kind of the initial push, don't panic. You can always get the pullback, which always happens, and we set the levels and we'll see a pullback. And that's pure market manipulation to catch people. I've got pending orders for people who set pending orders on NFP news events. They're just, shark bait basically. Because if you've got a pending order set for this, then obviously there's 100,000 traders probably exactly the same. It's an easy liquidity grab for the market makers. So you're better off going live, getting in, get as many trades as you can, getting some green and getting out, then waiting for the pullback, and then waiting for the market to resettle. And that's kind of how we do it. And I teach all this in the group anyway. And again, this is purely for entertainment, my own personal entertainment, not financial advice, not telling anybody anything new or what to risk. I just go with the direction and try and get the pullbacks. And we've got a nice little signal set up again that can help. We've got a system here that avoids all the fake outs. We've got an RSI scanner, we've got our trend line, and we've got a Fibonacci, and that's it. It's just a bit of price action. As you can see, gold at the moment is 1700, so it's been on a steady push. Any kind of pullback has been minor. There was no sell there, there's a buy there, no sell there. There was another buy there, again another buy, no sell there. There was no buy there. There was no, there was a little sell there, and mostly it's just been buys on gold. Our fib will get redrawn automatically, and we've got some supply and demand zones, so we can see the levels here where NFP will break, and always put a range, a level, 2 levels of where I think price will go, and usually smash depending on the result and how far the market gets it wrong, which has been the last dozen NFPs. The market's got it way wrong. So then you can measure. The best thing to do is measure for where price is now, and we're talking 222 pips to the downside, and we're talking probably about the same 20 odd pips to the top side. So usually it will go more than that. We've got the golden zone here on our fib, so I'm just going to draw that in there. So again, that's a nice potential area where we could get some movement if we get the news better than expected and we have a drop on gold. To the top side, we can just zoom out and we can see here that we've got again a level just about hit up the top of those candles. So that's more like a kind of zone where we could be aiming for outside of these fibs. So I'm just going to pull my line back into here, setting these zones up. Can get rid of that. And then again, measure again. At the moment, you know, that's more like it. 30 odd pips. Can either way. And then what I'll do, I'll go into my broker and I'll preset some take profit levels at 300 points, which is 30 pips. Include any spreads, should get me out about 25. So therefore, if the market moves faster than my finger in terms of exiting trades, I will bag some pips. Stop loss is down to you. You don't preset a stop loss because you'll just get completely wiped out. This is where you've got to, you know, if I get this trade totally wrong and it goes up here and I'm selling, then obviously I'll just end it and then I'll re-enter the trade to pull back. And that's what you've got to do. It's a mental stop loss as opposed to a preset. Anything preset, you shark bait, you free game. People are, you're showing your hand. And you know, probably the risk management is worse than if you don't have a stop loss but you're willing to end the trade yourself, you know, and everyone's got a different account size, so that's your own personal risk management. But if you start setting pending levels on any major news event, you're just going to get blown out of the water. That's my experience. I've tried it. That's what I used to try doing fundamental trading with pending orders, thinking, hey, this is great, this is easy. Set a pending level for a sell, pending sell for a buy, take profit, and I'm going to go both ways. No, looks great on paper, might work a few times, but overall the market can see that and you get wiped out. So we're going in live, even if that means missing some entries because the orders don't get filled, or because you know, there's more money left on the table, so to speak. But these are the levels I'm looking at. So I'll try and go depending on the result. Now let's have a look at the calendar, and obviously they're looking at an expected figure of 300, a drop from last month, and this will be amended, of course. Bloomberg are saying 280, so obviously we're looking for a figure higher than that to get a drop on gold. And if this figure is lower, then we might get a buy. Again, we'll wait and see. And what usually happens with our signals is they come in with the momentum. These are momentum based. So again, if we get a buy signal and the news is better than expected, you know, we can kind of take that and then wait for the pullback, and same with the sell. So we'll see. This is a new little signal that I've added to it. That I'm not a big believer in signals, but they've been working really well on the opens. We've got our bigger trend bar here. Obviously it's saying it's in a range at the moment. We're flipping between red, green, red. RSI is a neutral zone, so everything is tight basically for NFP, and usually you'd set a zone around here and here if this was an open to bag about 100, but like I say, with NFP we should get a spike up to these 330 pip levels. It's just a matter of which direction we go in, as always. And we are literally 15 minutes away, so we'll just keep on this. Just got my coffee topped up, and like I say, this is the fib zone as well, golden zone 5618, maybe 382 as well, but we've got a demand zone there. So price could smash through here and then people will buy. When it gets to here, people will sell, but let's see. Nothing is predictable with this news event. That's the exciting thing about it. It's a true scalper's dream because of volatility. The movement is quick, fast, and you just got to click try and get as many orders filled as you can, and then as soon as they go green, exit them. And you might get a few that go into the red because your broker is slow in exiting the trades, but overall you should get that profit. And obviously the lot size and everything depends on you. Let's plumb into Bloomberg as well. Everything's on a bit of a momentum boost at the moment. Look on this, on DAX 1.36. We've got some wins on that this morning on the open as well. We're kind of I looked at my stats this week and we're at 82% overall on all trades across all the boards this week. 82%, so I'm pretty happy with that. That's consistent. Again, we were 80 odd last week and the week before. And that's the name of the game, is being consistent even with major news events. So we're about 13-14 minutes away, and obviously we've got to take into consideration the hourly earnings as well and the participation rate is as well. All this adds to the movement of NFP.
And the Great Court British Museum. What was your...
So if everything here is red, hey, that's even better, and everything's green, even better. You know what I mean? We want everything really to sync the same way. But the hourly earnings, year on year, month on month, also play a big role in how far NFP pushes. And you can see we're expected it to be the hourly earnings up on the year slightly, but down on the month. So kind of a mixed picture there. And again, this could be under 200, it could be over 500, who knows. You know, this is the figure, then the private one as well, exactly the same. They're predicted to be the same, so this is going to be very interesting. And the unemployment rate is predicted to be the same again. So I'm just going to post this into the group so everyone is aware we're about there to trade this. Like I said, people going with big Lambos on this, so you know, I've learned just to smaller lot sizes and multiple trades is the best way. I know you're paying commission and spreads multiple times, but you know, it's just, you've got to make that decision where you're going to have one trade and try and hold it, you know, and then risk it, you being scared, or multiple trades. And obviously you want to have enough margin in your account where you can pull 4 or 5 trades, and if they all go against you, you can re-enter 4 or 5 trades in the opposite direction to counterbalance, and then when you get to break even, you cancel all the trades and then start again. That's how you get yourself out of digging yourself out of a hole. Whereas if you over leverage it and you're just using one trade that basically uses up all your margin, then if that trade goes wrong, you just got to exit it in a loss, and then you're screwed in terms of getting back in. So, you know, never, make sure you've got that percentage correct. And again, I teach people this, but that's why I know I could open 10 positions if I need to, and I've still got plenty of margin to allow drawdown and things to come back to me. And that's the key thing. Whereas if you, like say, right tight with your account and you're going all in, then that's where, yeah, it's great if it goes your way, but if it doesn't, and most of the times with spreads and commissions and market manipulation, you will go straight into drawdown, and then, you know, the heart starts fluttering. And that's what, you know, the psychological effect, as we all know, can kick in, and you start exiting and taking out trades, and then you see it going your way, as always. We can see gold now, look, it's in a nice range right at the top, kind of top of the Fibonacci. We've got two supply and demand zones, but this is where I think I'm predicting NFP could spike to. It'll at least break the supply and demand zones, even if it's a temporary spike down, up or down. The trend bar here has got no play whatsoever in the direction of NFP, so don't get sucked into any indicators thinking it's going to be a, you know, it's a 50-50 coin flip then, and you are gambling. We need to wait for price action to move and for the result to come out. And like I say, this will spike up or down before we get the result. That's fine, because then if the news is the same, we'll wait for a pullback, expose wick, and we go in the same direction. If it's the opposite, then obviously we wait till it peaks out at a key level, which we've identified these key levels of support and resistance, and we pull back the opposite way. And we do 2 lots of trades, and then that's it. We are out the game, and we will wait for the NY open and see the main market's reaction to NFP, and then we're done. Let's hope it goes that way. I almost see NFP like a robbery, like you're just going in, grabbing what you can and getting out again before everyone else has even seen you. This is what the whole thing about true scalping is, you know, just stealth, getting in, getting out. It doesn't matter if you're making 50 cents or $5,000. It's all about being consistent and having the green and the win. It doesn't matter that you could hold longer and all that, you know, that's for other traders to do. It's not scalping. The longer you're exposed to the market on a small time frame, the more you've got the chance of drawdown and things going against you. So especially when we focus on, we're on a 5-minute time frame, and that's what we stick on. We don't look at other time frames. We're just looking at the price action within our zones that we create. And when it comes to NFP, what's it matter on a 4-hour or daily if the market's bullish or bearish? It doesn't matter, because the NFP takes no notice of that. It's all about the data points, and that's the good thing about fundamentals. Especially now, fundamentals are more important in the market than ever before, because the Fed, all the central banks are looking for these big data points now to predict recessions and interest rate rises, when there might be cuts, etc., all the rest of it, more so than there were, you know, for the last year or so. So I expect big moves, and I expect the prediction not to be right, but who knows, you know. I can't remember the last time they actually got it within 10%, and if it is, then it's interesting. It'll be interesting to see what happens with the move. So we're about 6-7 minutes away. Let's just see if Bloomberg are banging on.
Wage expectations of that have been very high recently don't continue to stay so high.
So we're logged into our broker.
Pull inflation down if people continue to demand very high wage increases.
Randy, really good to see you. It's Anna in London. Where do you think the assumed transmission mechanism of these higher rates, where could it all fall down? You described there some of the process, so interest rates go higher and they want to weigh down on job vacancies, weigh down on wage demands, weigh down on inflation. Where could that go wrong and not actually happen?
Well, it could be that there's this fundamental disequilibrium in the labor market. Some
oil is in a range as well. Look, everything gets affected by it.
Difficult because we've got so many disruptions.
Well, you can hack and Ashi on oil where we're using normal candles on this kind of news event.
That people have that you might not get the normal
US 30 is already
circumstance
pushing. Look at that push up on US 30.
higher interest rates sort of leading to,
You know, there'll be a lot of people that are going, okay, I'm putting buys in now, we're going up to here, but it's dangerous. It was a nice buy signal. You know, you could have got in here. Look, beautiful little run. That was spot on. Our trend line. I'd have got in on this here, look, and again, there's 10 pips, 16 pips, even with the spread. 10 pips, easy. That would have been a nice little trade if I was trading US 30 now. And obviously we're pulling back off the top of the fib.
Right. So Randy, so from that, by that logic, the jobs print we get today is,
like I say, it's best to stick with one thing. I want to go in on gold, even though I hate paying the commissions, but
it's the echoes from the past that,
I'm hoping for a big move on this.
Exactly right, because it's long and variable lags. It doesn't just, you know, the Fed raises rates. It doesn't mean that the economy
Level set, market's saying bearish, doesn't matter to me.
Randy, you're going to be sticking with us, I'm happy to say.
Depends on this result.
Of the University of Chicago going into payrolls about 7 minutes away. Mike McKee in the seat, microphone switched on. Mike McKee, what are you looking for in about 7 minutes' time?
You know, a lot of the ancillary indicators have suggested that we might get an upside surprise for the month. But one thing to consider is that the Bureau of Labor Statistics has gone back to an older form of their seasonal adjustment. They changed it during the pandemic because the numbers were so wildly out of whack. So there could be a very large seasonal component to this that would subtract a lot of numbers. We'll look for that.
Interesting. Are you looking for a
Talk about manipulation. It's like we get the figures wrong, so let's make something up so we get more closer to I love it.
July is usually revised higher, so we could see a bigger number. And one thing to watch for going forward is the government's already announced that there is something like 526,000 jobs over the past year that have not been allocated to various months yet, but that overall employment is about 500,000 higher than they originally reported. We'll get those assignments come January, but they've got the preliminary number out. So we still see a strong labor market.
TK, get out the blindfold and get out the dartboard, I guess. It's one of those. Feels that way.
It's after
looking at the range of estimates.
Yeah, and I think that should be considered normal, John. We forget we're at a pandemic. I saw one data point yesterday of deaths going back above 500. Again, not to be inflammatory on that, but this is so unusual and so original versus other cycles.
Yeah, this easy could be over 500, could beat last month, and then we should get some nice movement on gold. So, it's exciting. Remember, the YouTube on is lagging. Remember on these.
You're all familiar with the previous read at this point. It was 528k.
Yeah.
Equities, Tom, let's say they're going nowhere going into this jobs number.
Yeah, there's been a churn there in the market. Even the FX market has pulled back a little bit from the excitement.
Got 3 minutes to go. Good luck, everybody. Stay strong. Make sure your fingers are on the trigger. Grab what you can out of the markets. There's a good chance. But like I say, don't be suckered into missing out if we get the move. Look, because, you know, like I say, if you miss that initial move on the first candle, you can catch the next one. You've got probably 10-15 minutes on NFP.
The jobs report in America coming up next. Your estimate 298k. The data drops in just a minute.
There we go. We've got a sell on the RSI. You know, that's predicting it to be better than expected, is it? Who knows? 1 minute to go. Countdown. Here we go. Right. Make sure we're in. We're logged in. Yeah. 1 minute countdown. And let's watch that market move. Like I say, there'll be a delay with Bloomberg behind this. So don't take no notice. Follow this. You know, your whatever your news source you're using. I'm using my FX book, and we'll watch the move already. Look, it's pending. Look at that, spiking either way. Watch the spreads increase. Doesn't matter because the move will cover any spreads.
However you get your news. This is Bloomberg Daybreak with Lee. On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web.
10 seconds. Good luck, everybody. Get what you can.
Why has Elon Musk said no to the car factory?
Watch it move. Watch this move.
Do you think that by bringing people
It's going to smash our TPs.
There must be communication, even if it doesn't necessarily resolve the problem. It is better to have dialogue.
308. What a big spike. Look at that spike. Beautiful. Beautiful. Look at that.
Only on Bloomberg.
Let's get in on the action. Let's get in on the action. Let's see how many it's going to push up before it pushes back down again.
What the order is going to look like, how much we're going to pay them, and
Come
how
on.
much, like, the consumer is paying them. And so they can decide whether they take an order or whether they refuse it.
I've got a load of positions away.
Shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat it?
Oh, amazing. Come on, come on. We've still got some positions open. 10 positions open. We're just closing them now. Come on. We're closing positions. We're closing positions. We're in the buys. We're taking the buys. We've got 3 positions left. Come on. We're done. We're done. Woohoo! What a move. What a move, team. Look at that. Just waiting on the buys. You've got to go in on the buys. It's still going to push up a bit more. What a result that was. Look at that.
For the inside scoop on sports betting, catch the lineup right here.
Let's reload back in again. What a move. As soon as I saw that wick down, you've got to fill that wick. It's amazing. That's what you've got to do. And we're 315, so slightly higher than expected. It's a nice move. Oh, God knows how many trades. I just clicked as many as I could. I must have got 20 odd positions away. So it's better than expected, but only just. Now we'll see if we get a dip down on gold. Let's quickly look at the chart. Look at that. Oh, you should have sold here. Is it going to push up? Yeah, a lot of brokers got froze on that. I was struggling to close my trades there, really struggling. So I think we made probably about, I'm just going to post my result. I managed to do 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 trades, and I got 2 losses of about $40, but we made 1, 2, 3, probably about 700-800 there. I'm just going to post the results into the group, all traded on gold.
Earnings come in weaker than anticipated, 0.3% up, which means the average year over year is 5.2% unchanged.
IC was a nightmare.
That had been expected. Here's an optimistic number for the Federal Reserve. The labor force participation.
Look at it push up now. Look at this.
62.4 from 62.1. So
it's going to reach here again. We can go again.
Back into the labor force looking for jobs.
What did I say? 300. I set my TPs at 300 and it smashed through it. I just tried to get as many trades as I could away, and like I say, I managed to get 16 trades or whatever done.
Unemployment rate rises to 3.7%, and that would be a function of those people going back into the labor force. So let me take a further dive into the numbers here, John.
Sure, do that.
You can take a dive into the markets and
it's
see how
pretty
we're
simple,
reacting.
Mike. Yields down, equities up. Yields at the front end down by 5 basis points.
So they got it almost right this time.
On the S&P, on the Nasdaq up 0.6%. Dare I say, Mike McKee, that this might be called a Goldilocks jobs report through much of this morning. Just given what I'm looking at the moment, you've kind of got an inline payrolls figure. Unemployment's up, but participation is up, and wages are just a little bit softer. If the Fed had to design a jobs report this morning, Mike, would it look a little something like this?
It probably would. This is kind of what they're expecting, kind of what
But that was a good NFP.
The unemployment rate rises because the number of unemployed people increased by 344,000.
And that was on 0.5 lot sizes. That's all on gold, nothing crazy.
Jobs yet. So that's reasonably good news. Hispanics rose during the month.
And see if you get a steady increase on gold, and then it'll pull back for green.
So basically, it seems to be a number of men coming back into the labor force that did not find jobs yet.
Critically, dollar gives way. Even the yen gave way after a 140.50.
So once I see a spot like this, I got in because it was exposed, and you push up, so you go in the direction. Obviously, everything's telling you that's the right direction. The result was right as well. Like I say, for gold, it was good for gold because they got it about right. And then when you get to here, if you could, you should have sold and then come back down. And now price is coming back down. I've made so much I don't need to trade it. That's, you know what I mean? It was I'm just adding up what I got there. 250. This is in pounds. 250. 300, 400, 500, 600, 700, 800, 900. So yeah, we bagged 1,000. We got over $1,000 there in what? 1 minute, 30 seconds. True scalping team. This is what it's all about. Once you get that technique and you follow the rules, what I'm saying, this is what you can do. So yeah, $1,000 in less than a minute of trading. So you know, it's one of the best NFPs we've done. Again, it was a bit of a nightmare because the broker was not filling my orders, and suddenly they all block filled and they all went straight in the green, and I just had to press, you heard me, press about 20 times to close those trades. That's the only thing you've got to wait out for is the manipulation. Now pushing up, look.
Something I said moments ago. We'll see if this move sticks, but if you could get the Federal Reserve and equity market bulls to agree on something, on what a great jobs report might look like, if they could design one, Tom, I think this is maybe what they come up with.
Yeah, I agree with that, and I think the hourly earnings are way more quiescent than what we saw from ADP a couple days ago as well. And again, an equity lift here. The VIX from a 27 level and the angst of 2-3 days ago comes in nicely to 24.38. A few moments more with Randall Crossley. He's a former governor.
So well happy with that. I hope some of the team managed to bag some as well. Like I say, usually I would have done 2 lots of 5. I did an extra few trades, but that was just because I was clicking to try and get that position filled. So
America's labor economy is being homogenous, where we talk about an all-in, say 3.7% unemployment.
gold was nice and smooth, and now it's going to retest that level 236. If you're looking for sales now, all you got to do is wait for this RSI to be overbought, wait for it to dip down, wait for some red on the trend bar if you want to wait for this, if you're unsure about taking the buys now, because we're at a fib level. We don't know if it's going to retest this level or not. So if you've missed it now, it's kind of like, yeah, just wait.
Slightly lower wage growth, which is exactly what the Fed is hoping for, that more people will come in, relieve some of the pressures in the market, and take some of the pressure off.
So wait for the pullback. And what we'll should get on the open, we'll probably get the sales on the open. So it's good to watch this. Let's have a look at pound dollar. And there was NFP on cable. Again, the dollar was weak for that, as we know, because the dollar likes bad news. That's when it goes stronger. When it's good news, as that was, the dollar goes weaker, so the pound obviously beats it. So that's why you get the pound dollar shooting up. So you should have gone for a buy on cable. Now it's obviously pulling back. And on oil, look at oil. Oil shot up.
Push back against that characterization of this report, given what you're expecting in the months to come.
Well, it's just one number.
Again, this is what I mean. You can take whichever market you want to trade, and NFP affects it all.
Has made markets somewhat happy that I think they were worried that there could have been a blowout report here, and unfortunately, good news in the labor market can be bad news because the Fed will have to respond.
And US 30 as well. Look, you could have traded that.
It's on a good path, but the Fed is still going to be debating 50 or 75 basis points, and I think we're going to end up by, very close to 4 by the end of the year, if not at 4, and then be, hold.
Again, as you'd expect.
through much of 2020.
Remember, this is one of the few times where the markets, US 30 SP, go the way of the news. Usually pre-market you'll get that reverse, you'll get that manipulation, but NFP is so strong, the news was better than expected, bang, up she goes. It's as easy as it can be.
The Fed might decide if they wanted to call it a soft landing. Of course, Tom, that one data point doesn't prove a soft landing. You need a whole string of reports going one into next year.
But again, everything's now overstretched.
On the joke we've been doing today, John, good, bad, good, whatever it is, what this does is really push away a lot of the arch gloom that was out there. John, on Standard & Poor's futures, just printing 4,000 moments ago, and I want to give the dates here, and there's many dates back to July, back to June, then back to...
Just type in, it was a tough one.
And then you go back and
Getting orders filled.
4,000 of early April of last year as well. That's sort of where that fits into the continuum.
Literally, I was clicking and just nothing was happening, and then suddenly bang, 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 they all filled in. And like I say, I got the direction right. I didn't enter at the top of any candle. That's what you've got to avoid doing. Wait for a wick exposure, and we're always going to retest. Not always the whole wick like this, but then we get the pullback, and then we get the retest now. Look, the price is going to push back. Again, you can get another 10 pips. There you go, look, it's pushing. You can buy the dip. It's going to hit that 236. You want to wait for it to break this 236 level. It was going to go higher, or we're going to head down back into our zone. So there was the zone for the sell. Didn't happen, so we can get rid of that now, as we know. But gold was perfect there. That was such a good move. As a massive, no matter what you do, it's like watching when these cryptos get announced, the same thing. You'll never be able to catch that initial move because it's ahead of the game. There's people who are inside, whatever. No, got an idea. Market moves so quick, manipulation, whatever you want. You're never going to be sat there like this going, hey, I could have got all this. No one, unless you're inside the market, like I say. But for us retail traders, you just wait for it to be exposed, the wick, get the pushback, and then catch now like a retest. Look at this. Here's an area of resistance now we've got. I can get this line now. This is now our resistance level, the 236. As you expect, this is your new spike that probably is not going to get retested now by gold. Maybe not. I don't think so. And now the market will slowly return and then move again on the open. Let's have a look at the whole figure, you see. So you had average yearly earnings pretty much as expected, a down 0.1. Earnings per month was down lower, so again that's bad news, making gold go higher. Remember, gold's always reverse. Then the actual payrolls themselves were about, again, as expected. Like I say, it's the first time I've known it be under 10%. Employment rate was also worse than expected. Privates obviously followed the public, and the participation rate was as. So overall, it really was red, even though we got the good news for the individual stock market. But for oil, for gold, this is why. So it was a fairly easy one to follow, but this was quite a tight result. I mean, a lot of people were talking about it being over 500 again. So they got it. Whatever they did to adjust the figures and get the report, that's the closest I've seen it for a year or so.
But that's the one takeaway I would have from this report that I think is important is the look through to inflation.
Yes, and that's why it's such a big important data. It's not necessarily about the jobs, it's about how it's going to affect the Fed's decision to increase interest rates.
Does it make sense then to expect less hiking from the Fed, and in what sense? Less hiking in the near term or less hiking overall?
Because expected to be 290, so still higher than expected. So still more jobs being added.
Yeah, it's definitely about the near term
than what's expected. So that means the job market is stronger than what they think. So that gives the Fed the go ahead to increase probably by 0.75 instead of 0.5. This is what they're talking about, and this is how it affects the bigger market. And there you go, look, there's exactly what I was saying. There's the pushback, so gold's coming back to where it started before NFP. There's your new spike, which we successfully scalped. And if you missed it now, you're in a sell zone. Sell signal coming on. Gold now pushing. I'm hoping it doesn't go too low because I want to get the sells in on the open. But let's say we'll trade the US 30 on the open anyway. There's our notification bell for the sell signal coming and sticking. And if RSI breaks out of the neutral zone, then it's a sell. But at the moment it's dangerous because we're on this buy zone, as you can see. And obviously people have sold off from the NFP and now are pushing to buy back. So it's going to range for a little bit, I think, now. So that's it. It's done, basically. This is it. You know, one candle, 5 minutes of scalping, done. And hey, you know, a quick 1,000 is enough for anybody. That's a good way.
Ultimately, the Fed's in control, and we've said it a million times over the last week.
Oil doing the same thing. We're looking to get some oil trades away. That was a nice move up on oil.
Will it stick by the end of the day? We'll see. Futures rolling over just a little bit. Positive
pound dollar, exactly the same. Look, NFP pushes up, and here's your pushback back to where it was before the news. Here's our line for TP for when we enter the trade later on. So I want this to be as low as possible, so we've got a big rip back up.
Very good. John Farrell with the Secretary of Labor. We will look
NAS.
and television.
Let's redrawn our fib, and again NFP on NAS, exactly the same.
We've got a great team lined up here to get you out over the next 17 minutes of this jobs report.
Strong John market, everything pushes up.
I don't want to know inside BlackRock baseball, but are people selling bonds? Is money flowing out of debt?
Yeah, Tom, as you can imagine, you know, the flows are highly reactive to the returns, and this has been a historic negative return year for all categories of fixed income, and we've seen that in the past week as well in terms of acceleration, in terms of rates higher, spreads wider. This is a very challenging environment for fixed income because we came into this year really pricing the old inflationary regime, and obviously the inflationary regime has surprised the Fed.
So saying now we just wait for the open. We've got about 30-40 minutes to go, and we'll see what kind of reaction they actually get. Like I say, we're going to this time we're going to go in on US 30. Back to US 30 for the open. I'm going to put my line across it so I can see. And here we go. And this is where you can't do any kind of breakout strategy or system like we usually do, because obviously you've had such a big move with a news event that really you just got to forget that. The breakout zone, to be honest with you, is above here and below here, you know, and this kind of like you ignore. We'll get ready for for NY Open.
Ira Jersey's scheduled to be with us here in a moment, but we wanted to squeeze this in. With all the gloom that's been out there, and certainly with futures up 17, the VIX in a stick 24.39, maybe a little less.
So we'll grab a coffee and we'll wait, and these are our final trades of the week. Be our final trade on US 30 and our final trade on cable if we get. That's a beautiful sell signal. Could have got in on that. Missed that one out. But again, I trade what I trade when I trade, and I stick to it, and that's it. Unless I was watching this, that's a beautiful move. The dollar coming back, and we're looking at 115. They're on about going to 110, dropping down. Could be as low as 110 all the way down here in the depths. The cable.
Has been really performing here. Now, obviously, there are a lot of questions about whether that trajectory can be maintained.
I've got no fib on there. Just pop my fib on. You can see the levels. There we go. Supply and demand. So this is where a lot of people have got their buys in. You can see this $1.15 level. The bottom of the fib. Our new fib's been drawn. So I want this to hold, price to hold in this zone here, so that when we come to that line here, we can enter the buy on pound dollar. That's would be nice. We're ranging right now. Going to be just, we'll keep watching this. But gold, yeah, we'll retire gold now out of our picture. Poof. Oil, we need to wait for a sell signal on oil.
Really calibrated appropriately here.
Give us a heads up of some kind of retest back down to 382. I'm only looking for 10 pips on oil every time I trade it. And again, there's 20, there's more even with a spread. But these were nice, all these were all nice signals, all nice winning signals, really good when they line up in a moving market.
September Fed meeting, we need to get through some, you know, look, economic data is good. Unemployment data, you know, is still really robust. The ISM we just got
and maybe Michael, what we're seeing here is markets responding or coming round to that view, because US 10-year yields, 30-year yields resume their rise. 10-year yields up to 3.27% right now. You talk quite positively about stocks and about the earnings story, but others say that the earnings need to catch up with reality, and that means that we need to see cuts to expectations around corporate profits. Why do you not see that?
Well, look, I think part of this simply comes back to nominal GDP being high this year and probably pretty high next year as well. My biggest risk to earnings next year, I mean, of course, if we get a big recession, yes, that's gonna. There's no question that will be a big hit to earnings here. But you know, one of the other real risks for earnings next year is simply inflation coming down a lot. If that were to happen, a lot of the earnings will come in, and some companies will certainly see some margin compression there.
Michael, I want to give you a victory lap, Michael Purvis. We had Priya Misra on earlier with a call of the summer on curve inversion, and every once in a while, Purvis absolutely nails it, folks. A few years ago, Michael, you nailed ADXY, the blended Pacific Rim currency regime, ex-Japan. We now have yen through a new level moments ago, 140.80 on Japanese yen, many talking 145 weaker yen. Michael Purvis right now on what it means to see such currency weakness and strong dollar on the Pacific Rim.
Well, I think it's very significant. I mean, the fact is that the United States dollar relative to so many currencies, the euro, but particularly the yen and many EM currencies, is sort of effectively a petrocurrency, certainly on a relative basis here. So, you know, if you're talking about the yen, you have to consider hydrocarbon vulnerabilities, and they're as painful as oil prices are here. It's a lot less so than it is in places like Japan and the Eurozone. So I think there's
US 30 retesting, breaking out.
You know, I can't imagine how the yen would.
Again, I just don't want to jump in yet. I'm going to wait.
Substantially cheaper relative to the dollar here. So I think that's one of
recovering from that. What a move on NFP. It was great. That was, you know, that was one of the best NFPs. Really good. Surprised me.
Does that lead to a change in BOJ policy, Michael?
They got the factory orders month on month, but again, will be done before that news result comes out. So,
interesting sort of game of chicken the BOJ's been playing here. We'll see at what level of.
Yeah, and as I said, look, you got to that demand zone, and again, people are starting to buy.
Deflation, disinflation in Japan. You know, maybe
the pound dollar again. We're still in a true buy. We're still overall still red trend, a red RSI. So again, we just gotta wait for all this to play out. Wait to get close to that open before we make a decision on what we're gonna take. Oh, and like I say, we'll keep. Let's move that up. Keep plumbed into watching US 30.
I want to slip you in here very quickly. One more insight right now, quickly.
The idea that people have come back into the labor force makes a big difference, because when you
that's the push. Look at that.
Average hourly earnings,
everything up.
Down a little bit. So for 3 months now, we have seen flat or falling hourly earnings. They're still high, but they're coming down. So this is a very Fed-friendly report.
To get this in with Albert Nardelli, Yuri Kosova, and Michael Nenebauer on G7 backing a price cap plan for Russian oil to limit revenues. How will Europe greet this, Anna Edwards?
This has been something that Europe has not been on the same page as the US on. Certainly Germany had their doubts. They wanted Turkey and India to be part of this. So to Jack Fitzpatrick's point earlier on, the European response might rely on how the rest of the world responds.
let's go to Ira Jersey right now. We're jumping around here in stores, and I really want to leave some time for Anna Edwards on the politics of London this weekend. Ira Jersey on the bond market. John Farrell was talking about this is the report the Fed wanted to see. Do you agree?
I think generally yes. So the idea is that the wages are slowing. The job market though is still okay. So this is maybe leading us toward a soft landing. But of course it is only one report. I think the market is certainly taking it a little bit as a Goldilocks report, where you've had at least the knee-jerk reaction has been for people to buy the front end a little bit and sell the long end. So you do have a little bit of curve steepening right now, and signaling that maybe we're not going to have as hard of a landing as the market was pricing just before the report.
And maybe not as much hiking. Is that the conclusion? I note that one piece of research drops into my inbox says 75 basis points is still on the table. You think so?
Yeah, I think 75 is still on the table. The inflation report, I know you had Jeff Rosenberg on a little bit earlier, and he mentioned, look, inflation is really what the Fed's trying to fight here, that this is one component, and obviously an important component, winds up being wages and the health of the overall economy. But the inflation report will be incredibly important for whether or not the Fed goes 50 or 75. To my thinking, though, this doesn't necessarily change where the terminal rate's going to be. So how far will the Fed go? Because even if they go 50 in September, we don't know what they're necessarily going to do in November or December, right? So if they go 50 each of those, then obviously we're going to price for higher terminal rate. We were just about starting to price for the terminal rate to be above 4%, and we backed off just a little bit from that this morning. But we're still talking about another 100 to 150 basis points of hikes here by the Fed over the next couple of quarters.
Ira, we spoke to Randy Krosner earlier. He was cautioning that the lag effect here is 6 to 18 months. What does that mean when we look at this jobs report? This is reacting to Fed policy a while back.
Well, it might not only be, quite frankly, it might not only be Fed policy here. We're the higher inflation and higher input costs for some companies. We were talking about things like corporate earnings. You just had Michael on talking about that a moment ago, and the thing is that you might slow down the pace of wage growth, and then you might also slow down the number of people that you're hiring overall, and those things will obviously slow down the economy in general. And again, this one report, and last month was incredibly strong, so we still have to see a few more data points before we can make any conclusions.
Quickly, Ira Jersey, what is a normal 10-year real yield? Is it 100 basis points? It's been so long I don't remember. What's normal?
Well, I don't think there is really a normal. Real yields have trended lower for 40 years, so we're kind of making new real yields here. I think a real yield somewhere between 50 and 100 basis points on 10-year tips is probably what I would consider a neutral range. I think the risk right now, and something that the market needs to see, is even higher real yields in order to slow the economy just enough to get inflation much
US 30 still high up at the moment. RSI pushing up to that 60 level. So are we going to see this increase higher on the open, or are we going to get this pullback back into that supply-demand zone? Possibly. There's a nice breakout. We've seen retest, push back up. We're back up to where NFP was now. On gold, it's trying to do the same. I don't think it's going to get much higher. Like I say, 236 was the max. Like I say, we're going to leave gold alone now. We're going to just focus on the US 30.
Am I prime age?
Can I take the Fifth Amendment here? Okay. Or I'll just kick that over to Anna.
Anna Edwards with us, and we're going to finish strong here with someone that is truly devoted, from Brexit on and before Brexit, to the strange politics of her United Kingdom. Anna Edwards, our heads are spinning. Who are the tiny, tiny group of people that anoint your next prime minister?
Right, well, it's the concern.
What do you think is the future of the US dollar?
For the next 50 years, you are absolutely going to see a monetary revolution.
Yeah, and this is the thing we're waiting for here in London, is to see who's going to be our new Prime Minister on Monday, and that will move the markets. In fact,
folks, to prepare you for the rest of the morning and really driving towards John Farrow's important conversation with the Secretary of Labor Futures off of this jobs reporting critically.
On Monday, have we got any GB news? Just the global PMI services that could be affected, 9:30 UK time. But that's, yeah, Monday's the day. If you're trading FTSE or pound dollar, pound euro, then obviously the result of the who's going to be Prime Minister is going to be the big fundamental. It's going to override all this. So just be careful on that, be aware of it, and make sure you're watching the news, basically, you know, as always.
Saying that to aggravate John Farrow. The VIX 24.21. We hope you enjoy your.
What do you think is the future of the U.S. dollar?
For the next 50 years, you are absolutely going to see a monetary
Labor Day. This is Bloomberg. Good morning.
Good morning. Good morning, New York. Good afternoon, London. So pound dollar, as I said, I wanted it to range on the bottom of this demand zone. It's doing that nicely. Want it to stay there so we can cross our Asian line and we can go for a 10-15 pip winner on the buy. That's what I'm hoping for. This could, you know, once it gets to here is where people are going to line up buys again. If it breaks this, then we're going lower and we're going beyond 115 down to 114. That's low. We tested it. It was tested it here, 115, but you can see it's a big area of support.
Live from New York, we begin with the big issue. It's jobs day in America and payrolls top estimates, giving the Fed the green light to keep on hiking. Mike McKee
there you go.
around a table for more.
As I say, it's giving them the green
John, and you got to believe that at the Fed they really like these numbers. It keeps the soft landing narrative possibly alive. 315,000 jobs created in the month of August, 526,000 in July. So that's only a revision of negative 2,000, negative 107,000 total. That comes out of June for the most part, and that has
that's a good chart to swatch.
Earnings. The unemployment rate rises to 3.7%, but that's a good news story as well, because it really is because we saw more people come into the labor force. Not that we saw so many people losing jobs. 62.4% is now the participation rate. That's up significantly from 62.1%. The prime age participation rate has gone up to 82.8% of John. That is the most since 2020, before the pandemic. Average hourly earnings, I mentioned, up 0.3% on the month, lower than anticipated. Keeps the annual rate at 5.2%, also helped by the fact that June was revised lower. Jobless story, I mentioned 3.7% overall for Black Americans and Hispanic Americans, 6.4% and 4.5%, slightly higher. The U6 does jump up to 7%, more people in the labor force. The household numbers you can see there, specifically influenced by that labor force number, 786,000 people looking for jobs. And you can tell the story with one chart, and that is basically that the labor force is almost now back to where it was before the pandemic, and that is pushing up on the participation rate, and that is flattening out average hourly earnings. And that's what the Fed wants to see. If we're seeing growth and we're seeing employment strength, but we're seeing wage growth slow, then that keeps that soft landing possibility alive, as I said.
Alive? But Mike, does it change the 75 call on September 21 for this Fed?
I would suggest this leaves it right where it was, somewhere in the middle. I'd be interested to see what futures price. We do have that CPI report coming on the 13th, and that will be dispositive, as they say.
Mike McKee, thank you, sir. Great lineup today. It starts, as always, with Rick Reeder of BlackRock. Rick, let's get straight to it. What would you call this one?
It was a good number. I mean, it gives the markets a chance to take a little bit of a sigh of relief, and the Fed a little bit of a sigh of relief. You know, we had a pretty potent week in the market of you know, look at the aggregate index was down 150 basis points. The S&P was down 4%. Tech was down 6%. You know, this number, you know, we're seeing pressure on real rates, concern the Fed has to move faster. I still think the Fed's going 75 basis points this meeting, but it gives you a little bit of, you know, we saw, I think claims data was solid this week.
That's the main thing. It exceeded the estimates, and that's
listen, the labor market's in
US 30 now, look, pushing all the way back up to where NFP spiked. So we're back to the top. We're top of our fib. If we can zoom out and see our next levels here, if we're going higher, let's go put a couple of lines across here so we can see. This will redraw anyway, but I'm going to go. We can see tops here, and we can see topping out about here. Bang. That's if. But on the open, I wonder if we're going to get a bit of a nice manipulative pullback back to this zone, and then up she goes again. So down. So basically almost like a double top pattern. Yeah, we're going to get here, we're going to get a center leg, push back and down.
You know, can you, and by the way, I don't think a soft landing is that hard a needle to land a plane on. And if these employment numbers moderate a bit, I think it's pretty good news. But listen, the economy, it's hard to argue. And by the way, the deep recession stuff is ridiculous. The economy's in pretty good shape, and particularly the service sector is moving along quite nicely. A good sector is coming under some slowdown, which is anticipated, and but you know, the economy's in good shape. And when you cut across the numbers, you know, I was looking at it again this morning.
Sure.
You know, it shows an economy that's moderating, but certainly not slowing that much.
Rick, you don't sound like a man carrying a lot of cash. These are the kind of things you're thinking, that the runway for a soft landing's not that narrow, etc., etc. So what are you doing?
We are sitting on a fair amount of cash.
I know.
But we brought that, you know, we talked about it. We talked about it last month on your show. We've let the line out a little bit, and have been buying. And particularly, John, one of the things that I think is quite different is now you're pricing in the front end of the yield curve. You've got almost 75. You got 65 basis points priced in for the September move, then 50, then 25. That's what I think the Fed's going to do. I think they're going to go 75, but it's priced in. The front end of the yield curve, all of a sudden you get 3.5% in the 2-year note. By the way, put some spread on it, and quality assets, the spreads are attractive in quality assets. You can get a 5 staying in high quality. So we've been doing some things about, gosh, let's start buying some quality assets in the front end of the yield curve. By the way, I think the longer end of the yield curve, not that interesting anymore, and I could see rates move higher in the long end. But boy, I think the front end's priced in an awful lot. And as long as the CPI report, as long as the inflation data continues to moderate, you look at what's happening, gas prices coming down. Boy, I think the front end getting close to 3.5% is the 2-year 3.5%, and with some spread. So we've been using some cash and buying some front end quality assets, and, you know, anticipate on any backups doing more of that.
So Rick, where does that leave your view on the long end then? You mentioned it briefly. 325, and I've got a long list of people that I've been writing their names down who think we've seen the high of the year. Do you disagree with that?
Yeah. So I think it's hard to mark down this is the high of the year, but Jonathan, I think this is, we're in a range. And if you said to me, I still think we're in the upper end of the range. You know, if you take where inflation break-evens are for 10 years, and you look at about 2.5, just under, and you look at, you know, gosh, you're putting the full almost
US 30 pushing way back. Like I say, they're going to get an extension up to these next levels. 31896, 31933 before some kind of retest. Let's see. We'll say we're about 25 minutes away.
The upper end of the range, I think so. I think rate volatility in the longer end of the curve will start to come down.
236 is where I can see it coming back for a push up and down again. Back into our 5. RSI 72s getting towards overbought. Still got time for more. Still very bullish.
We've worked our way through asset classes. Last month was brutal.
And again, we're just going to sit on our hands and wait. We don't want to be in any positions before the open.
Spreads are back to 500 basis points, there and thereabouts on high yield. Rick, when does that start to get interesting again for you guys?
So, I mean, quite frankly, I like running, you know, a bit of a barbell in that, you know, I've talked about quality assets in the front end, get some yield in the front end. Boy, if you can get
cable exactly where we need it to be, right at the bottom, just ranging nicely, not really doing anything.
Still tightening financial conditions. You know, I think it's worth owning some credit. You know, these yield levels, you look at that spread, then you put on top of where the risk-free rate is, you know, you can get 8.5% type of yield. Boy, those are pretty good break-evens if you believe in a soft landing, which I do. So I think credit is okay. You know, where don't I love? You know, I still think you got to be a little bit careful in emerging markets. I think you got to be a little bit careful in real estate related assets today, particularly residential. And, listen, Europe's in a tricky spot today. When you look at that inflation data we saw this week, both across the UK and Eurozone. So, owning some U.S. credit and particularly owning some quality assets in the front end, that strikes me as some of the more attractive places to be for now.
Rick, can we just wrap this up with just one question and revisit the conversation we had a couple of minutes ago? You believe in a soft landing, but you're carrying a lot of cash. Rick, why is that? Why are you still suggesting to people that they do the same?
So I am suggesting people do the same because the Fed's tightening financial conditions and they're going to continue. I mean, this number, it's a little bit softer, but boy, I don't think it changed the paradigm of we can go 75. By the way, they're trending liquidity. You'll see more of that play out in September. You got a lot of supply coming to the markets as the markets quote unquote reopen in September. So boy, I don't think the opportunity set has.
There we go. Let's reach that extension level. Look.
Listen, I still think vol is going to be.
This is where the first level of resistance is.
Still trend down, particularly
as I said.
Stack in places like equity. So
again, could have held a buy. It's always saying shoulda, woulda, coulda, but no, you want to be waiting now for the open and this potential pullback.
Not just a Fed. The ECB
going to get a retest at some point.
So I think there's a point in time if you can get enough carry and some yield in a portfolio without taking a lot of risk, why not?
Hey Rick, just awesome. Your buddy Jeff Rosenberg was on the show about 20 minutes ago. He was in shorts. He was already going to the beach, I think, as soon as that interview ended.
There you go, futures right, yes, of course.
Thank you, sir. As always.
Thank you.
It's good to see you, buddy. Futures up 8 or 9/10 of 1% on the S&P 500. We're bouncing back here. Let's continue the conversation, extend things with Crossmark's Victoria Fernandez, Jim Bianco of Bianco Research. Hey, Victoria, good to catch up with you. Walk me through it. Your take on the jobs report 40 minutes ago.
Yeah, well, Jonathan, I mean, I think when we look at it, the market is pleased with the number. It wasn't too hot of a number. I mean, there was the expectation that we could get a lot more. Look at St. Louis Fed. They were saying maybe north of 500 on the number. So I think the market is relaxing a little bit. We had a quick knee-jerk reaction higher. We've seen that come back. We've seen yields move a little bit. I think this tells us that they really don't have an answer to the September meeting. Maybe people thought they would get it here, but I don't think we do. So they're continuing to see 50, maybe 75 basis points at the meeting. I think the most important component, Jonathan, of this is the participation rate. And Mike was talking about it earlier. The Fed wants to see the labor market weaken, but we don't have to do it by destroying jobs. We can do it by bringing more people into the labor force. And I think this was a good start to seeing that happen. I think we need to watch that. That will control wages. That's going to be a big component of that sticky inflation. So we need to continue the trend with that.
Jim, what do you think?
Yeah, I'd agree with most of what Victoria said. And what I'd add is, last week we got an 8-minute speech, and Chairman Powell was very emphatic at Jackson Hole that they were going to fight inflation. This number shouldn't really change that. It's not going to change it either way, and that's why the market is now pricing still better than a 50% chance that the Fed is going to move 75 basis points. So I think when you put it all in the mix and you stir it up, I think what you come out with is unless the CPI data or the stock market
just hit that first level of overbought.
It more and more looks like
So I was waiting for a sell signal ideally, but not yet. I would love the sell signal to be when we get to the open. Perfect. And then we can get down to that 236 level on the fib, which is 70 pips. I think I've preset on IC markets. What have I preset? Could trade 200. Let's move it up to 300. Let's be a bit more positive. Last trades of the week. So if I enter some trades, I've set a preset level. If I don't end them myself beforehand of 300, which is 30 pips, but we'll see. Could push even higher now to that next level. Nice and steady.
Pivot away from the economy, focus on the inflation story. And the Fed is committed to.
That was the candle to get Elon.
That's not happening for a long time. So I think when you do it when you look at it in those framework, it makes sense that they would hike 75 and they would stay very aggressive. And I think that's what the market's trying to sort out right now.
And they want to keep financial conditions tight. So Victoria, with that in mind, even if you can take a constructive view on this jobs report we've had, and maybe even on the future, and there are some optimists out there, I struggle to find them, but they exist. If you see pops like this one, have we gone from buy the dips to sell the rips? Is that the play now?
Well, I'm not sure that that's the play at this point. I mean, we've got the inflation numbers coming out in a couple weeks, and to me, that's going to be key, probably more important than the jobs report that we have now. The Fed is going to be watching that. And look, you've got an economy that has some strength. If you take everything else out about what the Fed is doing, and you look at an ISM where you've got new orders and employment moving higher, you have supply side constraints diminishing, you've got an unemployment rate at 3.7%. Nothing there tells us that we're in a deep economic concern or recession is imminent. So I think you need to balance your portfolio with that. Find those names, those quality names that have good earnings, add them to your portfolio on down days. I don't think there's anything wrong with that, but you can still take a little bit of a defensive position with some healthcare names or with some staple names like we're doing. But I think you still need to be in the market because the economy is still strong.
Victoria, Jim, sticking with us. Let's see if this move sticks. We're fading at the front end. We're down about 6 basis points to, let's call it, 344. Blasting higher on equities. Equity futures up by about 0.8% on the Nasdaq, up by 0.75%. It's a difficult moment. The Fed's told you it wants tight financial conditions. We all know we've gone from a Fed put to a Fed call. Will that keep a lid on things? We'll find out by the end of the close, I guess. Let's get you some movers going into the open. Here's Abby.
Well, John, on this Goldilocks jobs report, we of course have yields, as you were just mentioning, coming in. That's helping out big tech. Apple, which ahead of the report had basically been flat, is now popping sharply higher, up 1.1%. Broadcom, the chip maker, also higher. It's not just this report, though. They put up a good quarter. They also gave a strong forecast. So a nice reprieve in terms of other chip makers struggling. Their bookings were strong.
First red candles appearing. Beautiful.
A big beat. They boosted their outlook.
Let's hope they stay up there. Don't want it to drop yet.
There, despite the inflation picture. And then finally rounding it out, oil, of course, rebounding. Occidental Petroleum outperforming, up 3.2%. Of course, Warren Buffett's Berkshire Hathaway owns 20%, so Occidental Petroleum tends to outperform the energy complex. A very strong mover on the day, John.
Abby, thank you. Coming up, global bonds falling into their first bear market in a generation.
This is about global interest rates. The fact that we've had a big move in bonds, in gilts, you name it, the global bond market is repricing higher.
That conversation up next.
What do you think is the future of the U.S. dollar?
For the next 50 years.
Yeah, pushing back up, beautiful, just exactly how we want it. Check on the cable. Just pushed up a little bit, back down again, but just gone green on the trend bar. But again, I'm not entering any trades on this till later on. We're just sitting, waiting, watching. That's what it's all about.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
Top names at the Fed are on Bloomberg.
It is essential we get inflation down. People want jobs, but they also want low and stable inflation. We have to give them both.
Nobody covers the Fed like Bloomberg, your global business authority.
What do you think is the future of the U.S. dollar?
For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
Getting ready, 10 minutes to go everyone before we do our final trades of the week.
Worried that the market was too optimistic and that the reality was going to set in. That's exactly what we're seeing.
We are seeing a meaningful sell-off in global bonds. This is about global interest rates.
Fundamental repricing.
Repricing higher, I think, to the global central bank community that's willing here to risk a recession just to fight inflation.
Return from artificially low rates to a more normal bond market environment.
I do think the longer duration bonds have further to fall.
I still think that we have seen the yield peaks for the cycle.
Momentum is probably going to continue to push yields higher.
It's certainly going to be an interesting next 2 or 3 weeks in the run-up to the Fed.
It's been fascinating. We've said that more than once. Global bonds now falling into a bear market, falling more than 20% from their 21 highs, with central banks doubling down on their commitment to tame inflation. Taylor Riggs with us for more. Hey, Taylor.
John, you know the math. Bond price down, yields higher. That has been the name of the game, and we finally get it when you take a look at sort of the global bond market. That terminal chart there about really falling now about 20% from the latest peak, as you can see. I wanted to focus on the U.S. as well because it has been sort of a huge movement on the front end of the yield curve. In the last month, 2-year yields are up 43 basis points to starting to get closer to that 350 level, the highest since 2007, as we've talked about. And then further out on the yield curve, I'll point you down to the bottom of the
Beautiful. Let's hope it hits this resistance level. As I said, just set that level there I did earlier on.
Hikes on the front end, slowing growth on the long end isn't actually playing out. We're really seeing almost a parallel yield curve shift all across the curve. When you dive down underneath sort of the surface, you're getting sort of a regional composition here, if you will. North America, of course, as we've talked about, you're off about 12% or so. You get a lot of LatAm. Europe as well, sort of the big decliners. Eastern Europe, when we think about sort of the big yield moves higher and some of the big prices lower. Overall, that gets you to sort of those almost double-digit.
See, we're got a nice safety net of some good profit today, so that's why we're going to do these final trades on US 30.
On a 2-year, looking at the equity market, a lift again up.
Like I say, it looks like 31980 could be a pivot area. Yeah, 31980. So 31980 is the next level there. I'm just looking at
muted wage growth and the uptick in unemployment.
Out there.
Will see this as warranting diminished hard landing concerns. Connor Senna, Bloomberg Opinion.
But I can, when it's been bullish so long, I always love the manipulation of the market to take it down before it pushes up again. I'd be surprised it might do, just go straight up, in which case we'll get in on the buys, hit this level and pull back. But just knowing how the market works, it could be a nice juicy sell-off to 236 or 382 before catching a lot of people out. So
yes, we are, unfortunately.
we'll zoom in on
this. A lot
this.
of people are having a hard time understanding what I said earlier. Fed is looking at inflation, the economy. And as long as the inflation numbers stay high, and high is defined as anything over 4%, they're just going to keep going. And they couldn't be possibly more clear. And you're right, Neil Kashkari saying he was happy to see the stock market sell off as hard as it did. They're not going to crumble on one week CPI report in 2 weeks. If they did, they blow all their credibility. So I know that this has been the story of this year, is the Fed talks hawkish, we say they don't really mean it, and then we're surprised when they do mean it. And unfortunately, that song continues.
Victoria, why do you think we're struggling so hard, so much to internalize that message that Jim just conveyed?
Yeah, well, I think there's been a lot of credibility issues around the Fed for the whole year. And so now that they come out and they say, no, really, this time we're telling you the truth. This is what we're going to do. We're going to keep our foot on the gas. We're going to continue to raise rates. We're going to get to that terminal rate of 3.75, 4%. Mestre, I think, even wants to go higher than 4%. I think it's hard for the market to believe that when they're seeing things like commodity prices come down, when they're seeing supply side constraints start to ease. So it's hard for them to put the two together along with a stronger economy. But I'm with Jim. I mean, look, when we were having client calls at the end of the last quarter, we kept saying, don't believe the story of the pivot. They're not going to pivot. They are going to continue to raise rates. And so we think people need to adjust to that story and believe that they're going to do that. Can they do that elusive soft landing? I think they can because of the strength of the economy, because of the labor market, because of the consumer balance sheets. We have the ability to do that, but I think we need to believe the Fed, and people are having a hard time doing that right now.
A super difficult time, and it raises questions about the sustainability, the durability of the bounce on my screen right now. Victoria Fernandez, Jim Bianco will stick with us through the opening bell. We come down about another basis point at the front end. We're down about 9 basis points to 341 on a 2-year. In the last 24 hours, we've pushed through 350. We've backed away now. As we back away at the front end of the yield curve, equities have a pop, up more than 1% on the S&P 500. Coming up in the morning calls and later, Bank of America's Mike Apen joins us at the opening bell. Plus, we'll hear from Labour Secretary Danny Walsh on the jobs report. Looking forward to the view from the White House in the second half of the programme. From New York, this is Bloomberg.
What do you think is the future of the US dollar?
The next 50 years.
We're nearly there, we're nearly there. Sitting on our hands, watching the 30. Nice green moving average cloud we've got at the moment, but like I say, I'm anticipating some kind of pullback drop on the open, and we can scalp that and then we're done.
A landmark climate bill passes through Congress. The expansion of nuclear energy and more investment for companies at the forefront of the fight against climate change. In this episode of Bloomberg Green, we'll explore President Biden's climate bill.
I almost think there's no superlatives that capture the scale of this law.
Find out what's actually in it and where it doesn't go far enough.
The thing that's not included here is a specific hard cap.
3-4 minutes to go, everybody. Good luck.
And look at what more needs to be done to invest in modernizing and
As I say, there's no more news to today, so we're just going to see what the market has. The market's going to react to that.
I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and don't miss this week's edition of Bloomberg Green, airing this weekend on Bloomberg TV, Quick Take, and online.
What do you think is the future of the US dollar?
For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
Yields down, equities up for now at least. We'll see if it sticks. Equities up by 0.9% on the S&P, on the Nasdaq. That's your price action. Here are your morning calls. First up, JP Morgan downgrading Dow Inc to neutral, anticipating headwinds from
Here's the morning calls. What are you guys doing stocks?
Salesforce to neutral, highlighting an attractive risk reward following the stock's 20% decline. And finally, Piper Sandler raising its Tesla price target up to 360, expecting higher prices and improving supply chains to drive shares higher. We're positive there. 1.71%.
Right, making sure we're logged in. We're on US 30. We are. We're just doing the 0.1 lot size of 10 cents a pip is what we trade. On the open, again, same strategy, going 3 or 4 trades, possibly 5, 2 blocks, and then we're done. We are done. And then we're gonna hit that gym and have a swim, and then we'll be back later on in the group to do some back testing and chats and go over the week's trades, have a look at the overall results. It's been a really good week. Bloomberg's going to be slightly behind us, as I say. So yeah, we're going to get a push up higher. I mean, if we go push up higher, then we're looking at, yeah, look at that. We've got 50 pips to the top side. Plenty of room here. Countdown, we've got 1 minute to go. Finger on the trigger. Like I say, I'm looking at that 3190 as a pivot, as a heavy resistance. We've already hit our 2 levels here. If this had been further away from the open, I'd have traded this, but you know, once we get that hour, I leave it alone and just wait. No FOMO, because there's always other trades. And like I say, we took some massive wins on NFP, so we don't need to risk giving any back. And we say we're not going Lambos, we're just doing, you know, 10 cents a pip on this, and seeing how many trades we can get away this time. See if our broker is going to be a bit more friendly to us than what we had before. 10 seconds to go. There we go. Good luck, everybody. Final trades. Let's see that move. There we go. Slow at the moment. We're green on the trend bar, green on RSI. There's the dip down though. Just going to put some trades in there. Brilliant. Yay. And we got the sells. Yeah, and there's the sell position. There's the sell indicator. Come on as well. And we'll just close out 2 more. Another $50. Yes, brilliant. Done. The sell exactly as I predicted, and a perfect end to our trading week. And we managed to get 1, 2, 3, 4, 5, 6, 7, 8 trades, and we got ourselves about another $150 there. Brilliant on the open. Yeah, and the nice signal as well. Easy to follow. When you read the market, beautiful. I said it would pull back. Look at that, all the way back. Amazing. Yeah, you can hold. We'll go again if RSI breaks out the neutral zone. We've done an entry on that signal. I already knew the sell was going to come. We had that good idea. And like I say, we took some nice positions there. So well done if you caught that. And I said it would retest that 0.500, and it's just about done it. Finish my coffee. Well, I say we want to see RSI now come through. See this? Just be careful of a retest or push back. It's on support. Here's that big buy zone, you see. That's a great day. I mean, we're talking 21% return. 21% increase on the account in 2 hours of trading. You can't ask for better. That's the advantage of true scalping. Once you practice, it's practice, 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 practice. As always, you know, it's a combination of watching the charts, price action, and definitely the bigger fundamentals. Now we can see sell up, sell on the trend, and what goes up must come down. So all that gain on NFP all the way back down now. And that's it. So there's no more news to look at. We are done. We will follow the cable trade and post the results for this inside my trading group. As you can see, we want to look for buys at the moment. We've still got a way to go till we hit this line, then we'll make our decision whether we're taking the buys on cable. We'll wait for this.
assets on the day as it reduces the odds the Fed has to push rate hike expectations even higher. That being said, demand appears too strong still for the Fed. That limits the upside on this number. Taylor Riggs has more. Hey, Taylor.
Hey, John, and like you said, for the risk on asset that you see on an intraday basis, that of course really being confirmed in the note that you read. You have equities higher, yields are falling, dollars weaker. So maybe that's sort of an interesting change of a market, maybe not believing a lot of that hawkish rhetoric. I think what is so interesting, if we take a step back and think
So I was saying to the guys, the team, yeah, when you're this far ahead, that's it. You've got to just take the money and run, and that is a good.
you have a 2-year yield though, John. You're only up 7 basis points. Spreads are up a little bit, but only 17 basis points. And an equity market that's rebounding. So is this sort of the delayed effect of a Federal Reserve where we're not quite seeing the tightening yet? Will we not get that till Q4? Is this a Fed that has to go more because the market isn't giving the kind of reaction that typically we'd like to see? That's certainly something that we're going to be diving into and digesting in the closing bell today.
There's the promo for this afternoon. That's the Fed.
Oh, and that's oil. Let's have a look. Oil. Potential sell coming on oil. So we get the heads up with the bell. There's a sell signal flashing in and out. We've still got, yeah, it's just open a new candle. Again, RSI needs to be back in that crossing the red for me to take an aggressive sell on oil. Yeah, so we'll leave that alone, but at least I've got a heads up. This is the whole thing about the system. We can get the heads up, doesn't mean we automatically enter. It's moved down quite nicely actually, but again, the entry is going to be about now.
Straight off the top with a jobs report from now 60 minutes ago. Your thoughts on it?
Beautiful.
So I agree with Jeff. First of all, I'm not in shorts. You can see I'm in the office. I agree. The key statistic here is that labor force participation rate number. What I think it does is it opens the door for the Fed to slow the pace of rate hikes beginning in September. Right? Then I think we have to balance that with there's enough overall momentum in the economy to say this may not change where the Fed ends up, but it probably reduces the risk of another large rate hike in September. So I think the combination of that bounce in participation, softer,
beautiful push down on oil on the open there.
As well as a tick lower in hours, you know,
NAS as well. Pound dollar, yeah, another sell signal coming, but there's no sell yet until RSI's out of the zone, and we're still green on the trend bar, so we're leaving that alone. And we're only going to come down to 236 anyway. So like I say, I'm really looking for buyers on cable once this comes down lower, but we're about 20 minutes away.
Anticipate ending up, but it does, I think, mean we can get there
and look at that, beautiful sells on NY Open. Great, all the way back down into our supply demand zone.
A larger 100 basis point hike. So that's really all that I'm suggesting here, is that it opens the door to a slower pace of hikes. So the key statistic in my mind is the labor force itself. The size of the labor force for the first time has now risen above pre-pandemic levels. That has to give them at least a little comfort and suggest that maybe the labor market isn't quite as off balance as they thought.
What does it mean for your hard landing call?
Look, I'm still of the view that at the end of this,
and there's the retest pushing up. But I say you want to wait for a buy signal now before you take anything, and everything's got to be synced our way, which it isn't at the moment. You know, it could range for a little bit, so it's just pushed down. But here, that green zone, look, you see, beautiful buy zone, and people have taken their profits as we did, and well, that was good. 7 trades, 7 winners. We've had a really good day. I think we've done about, probably done about 35-40 trades today, and we just took 1, 2, 3, 4, 5, 6, 7, 8 losses from 42 trades. So hey, that's a good winning day, and like I say, we're 22-23% investment return on investment. So yeah, that's the advantage of true scalping. Yeah, the risk is obviously it's risky, but when you get it right, you can be done within an hour, half an hour of trading. Daily TPs hit, weekly TPs hit. It's just practice, as with everything, and being confident in the system you're running. So I'm going to leave you with everyone watching the cable as we're going to look for this. If it gets close to that NYR and there's no trade, we'll leave it alone. We want to see at least a 10 pip gap before I'm interested in taking a trade on that, but we shall follow that within the group. I'm off to the gym now session, and it's been a great couple of hours trading with everybody.
And they clearly think that too. Final word, Mike. September 13th, CPI. What are you and the team?
Yep, and CPI, like I say, we'll be waiting for that. We're trading live, and we'll do some more live streams next week.
And some indication that these big durable goods prices like used cars are indeed softening. So some of the incoming data there suggests we should get help.
But as always, thanks for watching, for joining in. Thanks for the team for watching. I hope you bagged some pips out there. You know, it's good fun, good entertainment. That's what it's all about. And if anyone does want to learn, you know, how to trade like this, then go to the website www.mohawkforex.com, drop me a message, and you can see how you can join our Discord group. As I'm looking to take just another 2 or 3 people, that's all. The group's small. I don't want a lot of people. I just teach people on a one-to-one basis when I can. So yeah, we'll see you on the other side. But have a good weekend. Everyone's deserved it after a good trading week, and we'll be back next week for some more lives. So until then, take care and have a good one.